Welcome back to Investing Talk Podcast.
Today we're looking at New Era Energy and Digital. The big question is it a good time to buy now?
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. We've seen, well, really an accelerated pace of strategic developments for NUAI recently.
Yeah, the last quarter especially, it feels like things have really picked up speed.
They absolutely have. I mean, this isn't a company just sitting still. They're pushing hard on their growth plans.
Okay, so let's look back maybe August 2025. That seemed pretty pivotal.
Definitely. That's when they announced that big partnership, right, with the AI cloud services provider.
Yeah, integrating machine learning into their digital energy platforms.
And it seemed to work, didn't it? Because the Q2 results that followed, they actually beat revenue guidance.
They did, and specifically pointed to that renewable energy intelligence segment driving it.
Which makes sense.
Yeah.
That AI partnership, it signals they're not just, selling power. They're selling data, optimized energy data,
Right.
helping manage grids better.
Right, more efficiency.
And then September rolls around, and they finalize that acquisition, a minority stake in a battery storage startup.
Okay, battery storage. Why is that so important for someone thinking about investing? It sounds a bit technical.
Well, it expands their reach, basically, into the actual, physical digital grid infrastructure.
Ah, so it's not just software optimizing someone else's stuff.
Exactly. Now they've got a piece of the physical assets where their software runs. It's like closing the loop.
Got it.
Plus, you had the management team presenting their sustainability roadmap at that Global Green Energy Forum. Got some good press from that.
Yeah, positive buzz helps. And that feeds into sentiment later, I guess.
For sure. Then October hits, and this is where it gets, really interesting for the bigger money, the portfolio managers.
Ah, the index inclusion. S&P Clean Energy Index.
Yep. That's not just a pat on the back. It means immediate institutional exposure, forced buying pressure.
Explain that forced buying.
Well, think about it. All those passive funds, the ETFs that track that index, they have to buy the stock now. Doesn't matter what their analysts think. It's in the index.
So automatic demand, which boosts trading volume.
Instantly. And we saw the effect, right? That short squeeze event later in October.
Yeah, that was wild. Triggered by the index news, but also those rumors, right? About big Q4 project announcements.
Exactly, which is, the perfect lead-in to what's coming up next. The next 3 months look potentially quite volatile.
Huge opportunities for maybe a re-rating of the stock, especially if institutions are playing catch-up.
That's the theory. The big date everyone's watching is November 13th, Q3 earnings.
Okay, Q3 earnings, what are the key things to look for there?
3 main things, I'd say. One, are they keeping up that revenue growth momentum, especially like renewal rates on those digital contracts?
Makes sense. 2.
Any updates to their full year 2025 guidance? Always important.
And 3. This feels like the big one.
Confirmation. Confirmation of those large-scale contracts that were rumored back in October. If they announce those, great. If not, the stock could take a hit.
High stakes then. And after earnings.
We've got the preliminary Q4 trading update on January 15th, 2026. That gives us the first real glimpse of how the holiday period went, critical for digital energy usage.
Right. And between those dates, there's other stuff happening, index things.
Yes, sandwiched right in there. November 28th is the big ETF rebalancing for the S&P Clean Energy Index. That's when the actual forced buying really happens.
Ah, okay. And that affects something called float dynamics. Let's break that down. What's that mean practically?
It just means the number of shares easily available to trade shrinks. When big institutions and ETFs buy up chunks of stock, they tend to hold it long term. It's not on the open market day to day.
So less supply.
Exactly. So if good news hits later, any upward move can be much sharper, more volatile, because there just aren't as many shares available to meet that sudden demand.
Interesting. And there's another date, December 19th.
Yeah, institutional ownership filing deadline. That lets us see which big funds have been buying in. More confirmation.
Okay, but the date I find kind of intriguing is December 25th, the Holiday Operations and Usage Report.
Oh, absolutely. That's a fantastic indicator. It's like a real-time check on their digital strategy.
Huh.
How much are people actually using this stuff during peak demand?
So it gives a clue about 2026 demand before any official guidance.
Precisely. A real leading indicator for that digital energy demand.
Okay, let's shift gears a bit. Let's talk about the underlying business health. Because, this is where maybe some skepticism comes in.
Rightly so. I mean, it's clearly high growth. Trailing 12-month revenue hit what, $718,761?
Yeah, just under $750,000.
Okay, but compare that to the market cap, $179.65 million.
Wow. Okay, quick math. That's like the market's pricing it at over 250 times its yearly sales.
Yep, that valuation isn't based on today. Not even close.
So it's all about the future, a speculation play.
Purely. The market's betting heavily on two things. One, that the physical energy assets are undervalued. And two, that this digital AI segment is going to explode into something huge, like a multi-billion-dollar platform.
But they're not profitable yet.
No, not yet. TTM net income was negative $18.76 million. But, and this is important, the losses are narrowing compared to before. They seem to be managing growth carefully.
Still, that high multiple means they really have to deliver on those Q4 partnerships, right? Execution has to be perfect.
Absolutely flawless. There's no room for error at that valuation.
So what's anchoring this speculation? It must be the physical assets, partly. That Pico slope field in New Mexico, almost 1,900 square kilometers.
The physical assets are the base, definitely. But it's their niche within those assets that builds the competitive moat, you know?
Oh, so they do helium, oil, natural gas liquids.
It's the helium. That's the key differentiator.
Helium, like party balloons.
Ah, well, yeah, but that's tiny. Think high-tech. MRI machines need it for cooling superconducting magnets. Aerospace uses it. Fiber optics manufacturing. Semiconductors.
So critical industrial uses where there aren't really substitutes.
Exactly. And the global supply is limited, notoriously volatile. The U.S. government's been selling off its reserve, putting pressure on private producers like NUAI.
So by focusing on this critical, scarce resource, they're kind of insulating themselves from the usual ups and downs of oil and gas, positioning as a key tech supplier.
That's the idea. It gives them a sticky, long-term growth driver. They're not just an energy company, they're almost a critical materials company in disguise.
Okay, that helps explain some of that high valuation if they can scale the helium production efficiently. Which brings us back to the AI optimizing thing.
It all ties together.
All right, let's look at the technicals, the chart. What's it telling us?
Well, post that October S&P inclusion, it's looked pretty definitively bullish. Clear trend of higher lows, higher highs. Investors seem confident.
The 52-week range, though, 32 cents to over $12, that's huge volatility historically.
Oh yeah, this has been a wild ride in the past, highly speculative. But the recent action, sort of stabilizing between, say, $5.60 and $7.60, that confirms the more recent uptrend.
And it's staying above key moving averages.
Yeah.
50-day, 200-day.
Consistently.
Yeah.
Which is, textbook sign of positive momentum and often institutional accumulation.
And the sources suggest a 3-month bullish outlook range, something like stick to $9.
That seems to be the consensus range. To break that $9 ceiling, though, we really need that fundamental confirmation we talked about, those Q3 contracts.
Right. But the momentum's there for now. And sentiment, does that match the technicals?
It aligns almost perfectly.
Yeah.
You've got insider buying trends management putting their own money in. Huge green flag.
Always good to see.
Institutional inflows are picking up, so the big players are coming in. And retail sentiment, chatter on forums and stuff, overwhelmingly positive.
That sounds like a recipe for, well, maybe another short squeeze if more good news drops.
It's a potent mix, definitely. Which leads us straight into those speculative catalysts, the rumors. Unconfirmed, got to stress that, but they drive the short-term moves.
Okay, what are the big ones floating around?
4 main ones seem to be buzzing. Number 1, a potential major European utility partnership.
Wow, okay. Doing what? Supply, data analytics.
Both, according to the chatter. A deal with a top-tier European power company would be huge validation for their international plans.
Big if true. What's number 2?
Government subsidies. There's talk they might get significant funding under some new cross-border energy digitalization programs, non-dilutive cash, basically. Free money for growth.
Always helpful. The next 2 sound maybe more structural.
Yeah, number 3 is this AI platform spin-off buzz. Rumors the board is seriously looking at spinning off the digital AI business as its own company.
Huh. Wait a minute. If they spin off the AI part, doesn't that leave the original company looking like just an old-school energy producer? Could that hurt its value? Seems risky.
That's the tension, exactly. The idea behind a spin-off is usually to unlock value.
Yeah.
Let the market price that high-growth AI segment properly, because sometimes it gets dragged down when lumped with slower-growth physical assets.
So it could justify that massive 250x multiple for the AI part if it stands alone.
Potentially, yes.
Yeah.
If done right. High risk, high reward. And finally, number 4, increased short seller targeting.
More people betting against it. How is that a positive catalyst?
Well, It's not inherently positive, but it adds fuel to the fire. If any of that good news we just talked about does materialize, all those shorts have to cover their positions, buy back stock, which can cause a violent spike upwards, a short squeeze.
So more potential volatility. Okay,
Yeah.
stepping back. Risk assessment overall. Given that sky-high valuation, how do the risks stack up against potential rewards?
The sources seem to feel the company-specific risks are actually pretty manageable, considering the growth potential. Management's shown they could adapt, like pivoting into digital.
And the helium moat helps protect against some broader market stuff.
Yeah, commodity price swings maybe don't hit them as hard as a pure oil and gas play. They've outperformed peers. Of course, general market risk is always there, but the company seems resilient. For a growth investor looking for those big returns, the risk profile looks attractive, according to the analysis.
So pulling it all together, the investment thesis, what's the final rating from the sources?
It converges pretty strongly on bullish. They put it at an 8 out of 10.
An 8 out of 10, okay. And the reasoning?
It's that combination, really. Accelerating revenue, even if from a small base, that's the fundamental signal. Very positive technical momentum. A calendar packed with potential catalysts for short-term upside.
Plus the long-term story.
Exactly, those structural drivers. The helium niche, the digital grid play. It makes the stock look appealing to both short-term traders wanting to play the volatility around earnings and long-term investors betting on that specialized growth.
So the takeaway is clear. Focus on execution consistency and watch those Q3 earnings for confirmation of the bullish narrative.
Yeah, the market's already priced in a lot of success based on hope and rumors. If management delivers, confirms those deals, keeps revenue climbing, then yeah, that path towards the top end of that $9 range looks much clearer.
For you, the listener, I suppose the ultimate question is, do you believe management can execute flawlessly against that incredible 250x revenue multiple?
Because you're not buying today's company at that price, you're buying tomorrow's hoped-for dominance.
That's the thought to mull. If they do pull off that AI spinoff, will the combined value of the two separate parts end up being significantly more than the current company's value? And how much is that potential future gain worth risking today?